Hello, and welcome to this explainer. If you're a business owner or an operator here in the UK, just trying to keep your head above water while the regulations constantly shift beneath your feet, well, you are in exactly the right place. Today, we're diving into the weekly business news for June 1st, 2026. Think of this explainer as your essential survival toolkit for UK SMEs. We're going to cut through the noise, look at the raw data, the official updates, and the new legislative drafts to figure out exactly what you need to be doing right now to protect and grow your business. So I've got to ask, is your business ready for the summer 2026 shakeup? Because between some immediate tangible tax savings that you really do not want to miss out on and critical compliance updates that could literally cost you if you ignore them, this summer is bringing a massive wave of operational changes. If you blink, you might just miss out on some serious cash flow advantages. Okay, let's get right to it. Section 1, Summer Tax Breaks Explained. 5%. That is the magic number you need to pay attention to right now. The government has officially announced a temporary reduction in VAT, dropping it from the standard 20% all the way down to 5%. Now, this is a massive cut, but it's targeted specifically at qualifying children's meals and family leisure activities. The whole goal here is to ease the immense pressure on households' budgets, while at the same time giving a much-needed boost to our tourist and hospitality businesses. So how exactly does this roll out? Well, the 5% VAT relief officially kicks off on June 25th. And you might be wondering why that specific date. It's because it perfectly aligns with the start of the Scottish school summer holidays. Then, looking ahead to August, children aged 5 to 15 in England will qualify for completely free bus travel for the entire month. Finally, the VAT relief period completely wraps up on September 1st, right as the kids go back to school. But listen, here is the absolute crucial caveat for businesses. The government expects you to lower your prices. You have to pass this VAT cut directly on to the customer. This isn't just a sneaky margin boost for your bottom line. It's a mandated saving for the consumer. Now, the devil is always in the details, right? Because there is a very strict dividing line between what actually qualifies and what doesn't. For meals to qualify, they absolutely must be served from a dedicated children's menu and consumed on the premises. Admission tickets for places like zoos, museums, amusement parks, and cinemas, those all qualify. Even advanced sales qualify, as long as the actual admission takes place during that summer relief window. Takeaway meals and sporting activities, though, they strictly do not qualify. So what's your immediate game plan? You need to update your signage, your tills, your accounting software, and your website right now to handle these specific categories. If a customer prepaid at the 20% rate for, say, a July zoo trip, you can make an adjustment on your next VAT return, but you are expected to refund that overpaid VAT directly back to them. Moving on to another really significant tax relief update, and this one applies to pretty much any business with vehicles. The Chancellor just announced a 10p per mile increase in the tax-free mileage rate. So for the first 10,000 business miles traveled in a car or van, and yes, before you ask, that totally includes electric, hybrid, petrol, and diesel, the new rate is 55p per mile. And the absolute best part, it's backdated to April 2016. This is fantastic news whether you're an employer reimbursing your team free of tax and national insurance, or a sole trader claiming a deduction based on your mileage log.
All right, shifting gears a bit. Section 2, Workforce and Payment Protections.
Look, we all know the current FitNote system is, frankly, broken, and the data backs this up. A staggering 60%, that's 6 in 10 employers, find the current FitNote process completely ineffective at actually supporting their employees' work and health needs. And guess what? The doctors agree. Only 3 out of 10 primary care professionals think FitNotes are a good use of a GP's time. To clear up this massive bottleneck, the government is overhauling things with a huge new pilot program. We're talking up to 100,000 appointments over the next year. In trial areas like Birmingham, Coventry, and Cornwall, they're shifting the whole approach. Instead of just waiting weeks for a quick GP note, patients might be referred to community health workers or even supported by non-clinical practitioners without needing a GP note at all. The goal is to completely scrap that binary fit or unfit note and replace it with highly personalized stay-in-work or return-to-work plans. It's all about keeping people connected to their workplace through reasonable, practical adjustments. Now, let's talk about getting paid. If you have ever struggled with cash flow because some massive corporate client just won't pay their invoice on time, you'll want to hear this. The new Small Business Protections Bill is currently before Parliament, and it introduces a strict 60-day cap on payment terms for large businesses paying small suppliers. And if they pay late, bam! There is a mandatory interest penalty set at a punishing 8% above the Bank of England's base rate. It also outright bans the withholding of retention payments in the construction sector and gives the Small Business Commissioner aggressive new powers to investigate and actually fine those persistent late payers. Real teeth, finally.
Let's look ahead a bit. Section 3 covers future tech and advertising.
If you run ads online, you absolutely know the headache of dealing with cookie consent banners under the Privacy and Electronic Communications Regulations, or PECR. Well, the Information Commissioner's Office just published a report basically acknowledging that treating all tracking equally is a huge barrier for businesses. They are starting to draw a clear line between low-risk contextual ads, which are just ads based strictly on the article or video the user is currently looking at, and high-risk past activity tracking. The ICO is suggesting that low-risk contextual advertising might soon be allowed without needing the user's prior consent. Now, let me be absolutely clear, nothing has changed quite yet. You must keep complying with the current rules for now. But this is a huge signal that a major shift is coming to better balance your marketing efforts with user privacy.
And speaking of the future, there's a new term you are going to be hearing a lot: agentic AI. The National Cybersecurity Center, along with some international partners, just put out urgent guidance on this. Agentic AI is the next generation. We're not just talking about a friendly chatbot that helps you draft an email when you ask it to. No, these are systems designed to act completely independently. They plan, they make decisions, and they take actions all on their own to achieve a broad goal you set for them. To make this concrete, the NCSC used this exact example. You give the AI the prompt, "Book me a holiday for less than £500. The AI independently goes out, searches for flights, compares hotels, checks your personal calendar, and actually spends your money to book the whole thing. Now, sure, it's kind of funny to imagine an AI accidentally booking you a miserable budget trip to a place you never wanted to go. But the NCSC is dead serious about the real-world security risks here. If an independent system has access to your business's finances and your live data, and it makes a mistake, that could instantly become a catastrophic incident. They are insisting that businesses adopt this tech very carefully, ensuring strict human accountability is baked into every step of the process. Which naturally brings us to our final part today, Section 4, Spotting Fake Business Invoices. Because while we're out here worrying about futuristic AI, old-fashioned scammers are targeting your business right this very second. Both Companies House and the Intellectual Property Office have just issued really urgent warnings about misleading requests for payment. Fraudulent organizations are out there mailing very official-looking physical letters to registered office addresses and sending highly convincing emails. They're running scams like charging inflated prices, sometimes hundreds of pounds, just to set up your Companies House online account, or to authenticate your details, or to renew a trademark on some fake exclusive online register. Listen, these are services that are usually incredibly cheap, or literally completely free of charge if you go directly through the legitimate government sources.
So, what is the game plan? You absolutely need a strict verification process for your accounts payable team right now. Here are the actionable steps directly from the authorities. Step 1. Rigidly check any website and email addresses to ensure they actually end in a .gov.uk domain. Step 2. Get out your magnifying glass. Look for those tiny disclaimers buried in the fine print stating the organization is actually not affiliated with the government. And step 3, if you have even a shadow of a doubt, pick up the phone. Contact Companies House or the IPO directly to verify that invoice before you blindly authorize a single penny. Well, we have covered a ton of ground today, from summer tax cuts to independent AI systems. And I want to leave you with this final, slightly uncomfortable thought. As automated tools increasingly take over our daily business tasks, how much do you actually trust the systems and the invoices creeping into your daily workflow? Because between agentic AI making independent financial decisions and highly sophisticated fake invoices sneaking into your mailroom, operational security has literally never been more important. Make sure your team is alert, ensure those VAT savings are passed on by the end of June, and definitely keep a close eye on your business mileage. Thanks so much for joining me on this explainer, and stay sharp out there.